Welcome back. Today we're going to be taking a look at some Bloomberg Palantir research from a technology senior industry analyst. Some of this is coming after Palantir's earnings, which was 1 week ago today for the Q1 2022 quarter. Some of it is coming after. But I just want to share this with you because this is from Bloomberg, and I know you cannot find this elsewhere. Okay, here's what they're saying. Palantir lack of recurring sales to slow growth. Company outlook. So this is their thesis. Palantir's lack of recurring cloud-based subscription model remains a drag on predictability in its business and limits visibility into the company's long-term view of 30% or more sales growth. Its concentration in the government customers and a handful of commercial accounts creates more risk on a longer sales cycle than software peers. Growth in the U.S. may outpace international results in the near term, given recent contract wins at federal agencies. Palantir's small sales force versus peers and higher upfront software expense may temper the addition of new customers in the near to medium term. Operating margin improvements could be limited by direct sales force expenses. So there's a lot going on here. I'm not going to be able to break everything down, but it looks like they're hitting on a few core pieces to the Palantir story, which is Palantir's nature of the business, much more high quality revenue, but it takes longer to get that revenue, longer to build these accounts out. I think there definitely is some good stuff in here in terms of the operating margin mainly being hit by the direct sales force expenses as Palantir tries to grow its small sales force so that it can reach this longer term growth target. Okay, Palantir's $4 billion goal sales target 2025 will require cloud and new customers. Palantir may need to increase its customer base by 40% annually from 2020 to 2025 to reach a $4 billion sales run rate goal, based on our scenario analysis amid declining average revenue per customer. Partnerships with hyperscale cloud vendors and system integrators remain key to boosting win rates in the US. Okay, so there are a few things going on here. Obviously, increasing the customer base, they're basically hitting on this idea of Palantir getting to more smaller to medium-sized accounts where the average revenue is less, so you need a higher volume of those accounts to increase towards that target that they have set. And it's interesting, they're talking about these cloud vendors, integrations, also looking to help the business. Next up, new customer growth key after 2022. Palantir has managed to keep a high gross retention and net expansion rate in its niche base of 203 customers, but it still needs to expand that roster by about 40% a year, once again for $4 billion in 2025. This was reflected in its large annual contract values, particularly at its top 20 clients, a group with average revenue per customer that's almost 6x Palantir's goal. That's what they're talking about when they mean high concentration. So it's great to have all that revenue from top customers, but they need to get more revenue, bring on many more accounts to even get anywhere close to the goal of the $4 billion, which I do believe they will succeed at reaching that goal and also exceeding that goal. Sales growth has historically been driven by the acquisition of new clients as well as increasing average revenue per customer. The latter, however, has been flat over the past 12 months, indicating that Palantir will have to focus on a lot more acquiring new clients to deliver on growth promises. So they're once again bringing up this idea of the increasing revenue per customer is not happening, nor would you necessarily expect it to with the current trajectory that Palantir is on. So let's take a look at this chart table we have here, Palantir's revenue scenario through 2025. So we've got total customers at the top, and in this column right here, we have the average revenue per customer. So right along the middle, 650 customers, $6.6 million per contract, and it looks like we get around $4 billion, which is Palantir's target. Now, if they're somehow able to get up to closer to 1,000 and the average contract rises to $9 million, it looks like they could be doing $7 billion. That's on the absolute high end, and on the low end is maybe they only 2.5x their client base and the average revenue continues to fall and they only do $2 billion, a little more than half of their target. Now that would be a significant letdown, but I think this is a great way to think about it. Now this is what I'm trying to do with my Palantir modeling. I've done a 3-statement model on Palantir, built out a DCF, done equity, multiple analysis on Palantir. You can find that in the description as well as at palantirvision.com, because I really think it's very important as an investor to be able to understand the financials of a company. Now, by all means, go make your own DCF if you know how to do it. But if you don't, that's why I've put the time into actually publishing something like this, because it's not enough just to be able to talk about the company or be able to do any sort of qualitative analysis. What really matters, and this is something I've learned the hard way, beyond that, is you have to understand the quantitatives as well. Something I've been working towards, and I hope you do too. Please build your own model or use mine, put in your assumptions, see how that changes things, base, bull, bear case, everything like that. I really think it's important. And I don't think enough investors do that. Okay, system integrators key to commercial ramp up. We've got another interesting image. I'll check that in a moment. Palantir's partnerships with system integrators will be key to faster growth in its commercial segment, where the addressable market is likely bigger than its core government segment. As Palantir has opened up its platform to make it easier for third-party developers to build custom apps, we believe that could help expand uses for its software in areas such as compliance and risk management. The company's alliance with IBM may be especially useful for expansion at healthcare and financial services customers, where Palantir could displace analytics offerings from rivals such as SAP, Oracle, MicroStrategy. The commercial segment is currently about 44% of Palantir's sales, $583 million in the last 12 months, suggesting plenty of runway given the large market potential for analytics software. Take a look at this. This was published in February, okay, so not completely up to date, but I did want to show you. There's this right here. We've got the government growth. This is the concerning trend, which was actually the decline from 2020 to down to 2021, which was Palantir's decrease in the growth rate of the government, while we've seen commercial stay flat. So when one's dropping, the other's staying flat, the overall growth rate is dropping. We need to see if Palantir can course correct this going forward, with the government sector having a strong second quarter, as we see some macro instability and Palantir's products and services in terms of their software being needed in this type of environment. Very much hope that comes to fruition going forward. Okay, number 4, U.S. sales still small versus peers. Palantir's sales in the U.S. are much smaller than those of other high-growth enterprise software providers. We attribute this in part to the company's longer sales cycle and customizations required in pilot phases for its software. Very key. Partnerships with hyperscale cloud companies in the US are likely to be the key to Palantir's customer expansion and shorter sales cycle in its commercial segment, we believe, where growth has trailed that of pure play cloud vendors such as Snowflake, Databricks, and others. So that's a very interesting point. And they're saying that what Palantir is doing, it's a bit harder to scale, and it definitely is in terms of the product, and partnerships with other companies could enable more commercial expansion, customer expansion, and shorten its sales cycle. I would like to hear Palantir talk to this. And then Palantir's contribution margin of over 55%, and it's the latest in its fiscal quarter, not this most recent one, but the one previously, is a stark improvement from its pre-COVID levels of 20%. This may suggest an inflection point in the company's market strategy, which could aid its win rates versus both cloud and legacy analytics providers. Okay, so on this side, we have 2020. On this side, we have 2021. You'll see how much more of the scale phase revenue came into play. Palantir's acquire and expand phases eventually, for most of them, convert into scale, which is huge, because that's the revenue that counts, that's the revenue that matters, and that's the revenue that will stay. That's what's so sticky about Palantir, and we want to see this flywheel that I've talked about for the longest time, for 2 years now, continue to turn and keep Palantir competitive in that regard, in keeping their clients and continuing to expand the contracts with them. So I'll just read one more of these, and I can circle back to this analysis later, which I think is very valuable. And I can do so if you leave a comment, if others agree that this is valuable stuff. The government momentum is going to remain strong. So this is an interesting take. It looks like this, once again, was at the beginning of the year. Though Palantir still has a niche customer base, the company has done a solid job expanding sales among existing clients. Its average trailing 12-month revenue per customer is about $7 million in third quarter of 2021, about 4 to 5 times above most enterprise software makers that sell to large corporations. Most of the company's government customers have likely standardized their analytics on Palantir's Gotham product, aiding the average contract value. The use of its software for contract tracing has bolstered adoption for supply chain analysis, which we believe will remain a boon beyond the pandemic. Palantir's products have also been deployed in intelligence gathering, compliance, risk management after recent state-sponsored cyber attacks, which may remain a driver of government segment sales. Okay, very interesting stuff, very complex. There's a lot going on. Let's look at this last graph right here. The average revenue per customer. We got the top 20 customers bringing in obviously the most revenue, the remaining average revenue per customer, and then finally the total average revenue per customer. We see that stark difference, the top 20. This is why many analysts talk about Palantir being at risk if they lose some of these top earners for Palantir. So that could be an issue, and you really see that when you look at a graph such as this one. So we're going to return to the top of this page. I just want to sign off here by saying I hope this was helpful. I really think this is very insightful research by the best in the business, Bloomberg. They're doing a great job of breaking this down. I will continue to analyze what they put out because, of course, this is behind a massive paywall. So please do leave a like if you enjoyed it, and I will catch you in the next video. Until next time.